Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning everybody, today the 21st of April, and let's try to continue our discussion of euro currency. Well, this is the daily chart of euro currency and our suspicion about the possibility of taking out these highs and that market could continue move to the upside due to some abnormal behavior on the during this couple of this trading session on the just for example on the 4-hour chart. So has been confirmed. So market has moved yesterday, shows some thrust to the upside, taking out these highs, and now holds about the 145. Why this behavior wasn't normal? Because market is shown here this V shape of reversal. So market hasn't shown any even shallow retracement after this strong plunge to the downside. So market just plunged down and right back. So this is not common price action. That is not unnatural for the normal market environment. And this type of reversal makes me think yesterday made me think that possibly market will continue move to the upside and can take these highs, because it's really this type of reversal is very cracking. Well, also there are some of clues both on the Great British Pound, where on the daily time frame you can see a lot of stop grabber patterns that could tell us that possibly on the Great British Pound the previous highs also should be taken, even it hasn't happened already. Okay, now what we could do currently. As usual, first of all, we should track this area 145, this previous highs, and market should hold above it to continue for the move up. If market will move to the right back, then I will not be so sure that market will continue move to the upside. Also, the current price action and its combination with this red line is the MACD predictor, can tell us what will happen. Current trading session hasn't been closed yet, and currently you can see the trend is bullish. Market stands above the red line. This is very important. If market during today's trading session will hold the bullish trend all the time, but to the end of the session will move back and close below it, and close price will be below the red line, this will be the MACD stop grabber. And usually this price action tells that the move to the previous lows till this C point will be very probable, because when the market hold trends above the red line, hold trends bullish, new public and other participants enter during the trading session because they see the trend is bullish, market is above previous highs. So that's very good. That's bulls are in charge. So we should enter on the long side of the market, where they place their stops somewhere below the market and possibly below the previous swing low. This is very common way of thoughts. Those who enter on the long side. Also you can see this was the breakout, so possibly some breakout traders also entering on the long side of the market. But if market will not confirm at the end of the trading session this shift trending to the bullish, and rather will move below it and shows bearish trend, or possibly it could happen during tomorrow trading session when the market, for example, close right here, but on the tomorrow trading day market moves right back and shift trend to the bearish again. This is almost the same pattern. Then we should expect the move to the C point with a great probability. So that's why in the current trading environment it's too risky to open some positions that you intend to hold for some days, because currently it's nothing determined yet. Okay, so we do not know currently will market really shift trend to bullish and intends to move high, or it's just another trap for those who are entering on this breakout. So possibly if you would like to trade today, I suggest that better try to enter intraday to reduce the risk, placing stop loss tighter, or maybe it makes sense to wait for a couple of days. Besides, the Easter is near, so possibly a lot of holidays will be. So I do not think that's very wise to hold position through the weekend, long-time weekend. Still, let's take a look on the targets. First of all, look at this pattern: A, B, C bottom. Market accelerates directly from the 618 target, totally disrespect move above the weekly pivot point and continue move to the upside. The nearest target is right here, 100% expansion from this ABCD pattern, 146.37. Just above the market, you can see the level of daily overbought, 146.65. So this will be the really tight area, very strong area of resistance. So if you intend to enter on this swing on the long side, I suggest you to close your positions around 146.50, somewhere in this area, because market has some nice probability of pullback at least to the 145 if it will reach it during the nearest couple of trading sessions. Now, from the other perspective, in a bit longer term perspective, what we see: A, B, C. You see the AB move is much gradual than CD. CD is very fast. Usually this price of such kind of price behavior tells that market has the potential to reach 149.50 area, 1618 expansion from this pattern. But if you remember our weekly research in the text version that I placed weekly on the ForexPeaceArmy.com, then you know that 147.50 area is the combination of monthly Fibonacci resistance, 88 Fibonacci resistance, and monthly overbought. So I think that we should treat this possible area as the nearest strong area of resistance. Potentially market could reach 149.50. Also in this area some weekly target stands, but in the nearest term, if market will break above it, continue move to the upside, 147.50 is the area that we should watch for. Now let's take a look at the daily time frame, on the 4-hour chart, to see what we could do right here. Here is the possibility for the couple of trades. First of all, we can see excellent thrust up on the 4-hour chart. This will be the nice basis for the Jordan Napoli double repo or bread and butter trade. So you all know, guys, you're familiar with these possible trades because we have talked about this a million of times. So if market will show some reversal to the downside, for example some bread and butter, double repo pattern, then possibly we could see the step grabber on the daily time frame. If it will be a bread and butter, the market just break it with this green line 3x3 moving average to the downside, reach the first support and accelerates to the upside, then this will be bread and butter, and the target possibly our area 146.50. Okay. Now the area that you should watch for is this area of support. This is weekly pivot point and daily confidence support. 4-hour confidence support 144.16, 144.33. So market should not break it to the downside. If it will happen, then possibly the bullish domination will be under question, because if market will move below the weekly pivot point, it tells us that possibly sentiment is bearish. And turns to the bearish, the market is not so comfortable with the continuation of the move to the upside. Okay. So just above the market, 127 expansion from this swing down, from this B point to C point is around 145.98, 146 area. So market could meet some resistance in this area, and possibly from this area we will see some development from this thrust. For example, double repo sell pattern or something, or maybe some retracement to the downside that you can use if you intend to enter on the long side of the market. So on the lower time frame, on the 4-hour chart, don't see any particular interesting important patterns. Okay, but in general, I still suspect that the bullish power currently is greater than bearish, and due to a couple of things. First of all, this move up is really strong. It's much faster than previous swing up here and this swing up. So this really fast move to the upside. Also, market move above the weekly pivot point and still holds above the highs. So this gives me some confidence that possibly market still continue move to the upside. But as I said, be careful of the possible stop grabber and this trap for the breakout traders and for public. If market trends shift trend to the bearish, then don't be long. Close your positions and be prepared for the possible taking out of this C point. This also could happen. So that's my view on current situation. If you intend to trade on the long side, I think that it's better to trade intraday with the short-term trades, and this thrust to the upside could give you some possibility. This could be, for example, directional patterns of Napoli bread and butter or double repo, or you may use some retracement from to this area or maybe to this area for trying to entering on the long side of the market. But be careful, track this area, because market should hold above it, and possibly market will show some retracement even only to this area 144.80, 145, because this will be logical, because this is the previous highs. Market should hold above these highs, and possibly this area will be the area where market will show some retracement too, and then possibly continue move to the upside to our daily target around 146.50. This will be the nice bullish scenario. Okay, but I recommend to close positions in this area because this is daily oversold, overbought, and the target from this ABC pattern. Okay, so good luck to you. Take your risk reasonable. The current market environment is very difficult to trade and to analyze. So good luck.